I mean, I think we're early. It's not that it's penetrated a lot. It's the price has gone up of, best performing asset in human history. We still have a ways to go because again, more money will be printed. It's just the way that things are. So I still think there are, relative to any other asset you can invest in to sort of preserve your wealth, it's still going to outperform. And so that's why I say Bitcoin is early, because right now I still believe that the price appreciation of Bitcoin will outperform other assets that are trying to do the same thing, because we all believe that fiat money will be printed. Maybe in over a very short period of time, it outperforms Bitcoin. Or there's a lot of institutional money managers who, can't get their head around Bitcoin, but they believe the same things that I do: money printing, geopolitical uncertainty. So they buy gold instead. And, over a particular period of time, gold could outperform Bitcoin.
Bitcoin is still early in its trajectory, set to outperform most assets as fiat printing continues. Arthur Hayes believes we are still early in Bitcoin's growth story. He points out that while Bitcoin has already proven itself as the best performing asset in history, its real upside remains ahead because fiat money will continue to be printed. In his view, compared to other assets like bonds, gold, or stocks, Bitcoin is positioned to deliver the strongest returns in the coming years, particularly as investors seek protection against inflation and monetary debasement. At the same time, Hayes acknowledges that in shorter timeframes, other assets like gold could outperform Bitcoin, especially during periods of geopolitical stress when institutional money managers who may not be comfortable with crypto turn to gold as a safer hedge. For him, both Bitcoin and gold represent the same macro trade betting against fiat currency debasement, but they attract different investor bases. Within crypto, Hayes sees Bitcoin as the safest long-term play because of its proven resilience over 15 years. However, he also highlights the speculative side of the industry, early-stage tokens that can generate 10x to 100x returns in a 2 to 3 year window. While many of these speculative bets could eventually go to zero, his strategy as a hedge fund manager is to diversify, holding Bitcoin for long-term security while also pursuing high-risk, high-reward opportunities in smaller tokens for outsized short-term gains. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives. Thanks for watching.
I mean, I think we're early. It's not that it's penetrated a lot. It's the price has gone up of, best performing asset in human history. We still have a ways to go because again, more money will be printed. It's just the way that things are. So I still think there are, relative to any other asset you can invest in to sort of preserve your wealth, it's still going to outperform. So what's your alternative? What other asset do you think is going to outperform from today onwards? Irrelevant what happened in the past because you didn't invest. So don't even get concerned about what that was because you didn't do it. So who cares? From today onwards, you can invest in bonds, you can invest in gold, you can invest in Bitcoin, you can invest in certain stocks. Okay, you have your ecosystem of things that all are supposedly going to beat inflation. Which one does the best from now until the future? And so that's why I say Bitcoin is early, because right now I still believe that the price appreciation of Bitcoin will outperform other assets that are trying to do the same thing, because we all believe that fiat money will be printed. I just think it's until such time when the perception about the pace of money printing changes. So I think that the investing public will start to believe or project that maybe the US and other countries won't print as much money as they did in the past. And therefore, all assets that are based on liquidity, which is everything, are going to decline in the price of fiat. So that could be Bitcoin, gold, stocks, whatever. So I think that's going to come sometime in the 2027, 2028 zip code in terms of time. And so I'm thinking, okay, well, for the next 2 to 3 years, what do I think has been the best performing asset? If I believe that dollars, euros, yen will be printed and ad infinitum from this period for these 2 years, 3 years, what's going to do the best? Because over a certain time period, it's a different trade, right? Of course, I can believe whatever I want, but I'm a diversifier. I'm a hedge fund manager, right? So I obviously have different, assets that'll perform on the same theme, but a different cohort's going to buy them. So could we see a revaluation of gold 4 or 5x higher because there's some geopolitical concern between US, China, Russia, Iran, all these countries? Of course. And maybe in over a very short period of time, it outperforms Bitcoin. Or there's a lot of institutional money managers who, can't get their head around Bitcoin, but they believe the same things that I do: money printing, geopolitical uncertainty. So they buy gold instead. And, over a particular period of time, gold could outperform Bitcoin. So it's the same trade. It's a different type of person, a different type of mentality who is buying it. I think Bitcoin is probably in the crypto space, the safest thing that someone can invest in. because the technology has been proven rock solid over the last 15 years, since 14 years, whatever, since the Genesis block. Some of the other, Ethereum and some of the other L1s have been around for a while, but there's a lot of speculative tokens that, may go up 100x, maybe zeros at the end of the day. Who knows? So I keep majority of my crypto wealth in Bitcoin, and obviously myself and Maelstrom, we do a lot of shitcoining, but we shitcoin to earn more Bitcoin. So if you take that as a given, then the question is, if I'm going to pay somebody a salary in crypto to invest in this ecosystem, can they outperform Bitcoin? Otherwise, I should just buy Bitcoin and hold it and not employ people. I mean, we tend to target investments that are, could 10 to 100x in the next 2 to 3 years from whatever we get in at the pre-seed stage versus where they list in the TGE versus where we actually get out of the position. Our goal is, 10 to 100x on a position. Obviously, we take a lot of zeros. Actually, not too many. The team has done a very good job of minimizing those sorts of returns. But over a very short period of time, 10, 20x return on some shitcoin will outperform Bitcoin. Whether or not that particular shitcoin lasts for 15 years, we'll see. I don't know. But we're really targeting, let's invest and let's be able to cash out within 2 to 3 years of any investment that we make on our early stage portfolio, which is why we prefer crypto tokens versus, equity in crypto companies, because that takes 7 to 10 years, assuming the IPO, and there's so many if thens and how to get your money back. In that respect.
Arthur Hayes frames his investment outlook around liquidity, how fast governments print money, and how markets expect that to continue. He argues this directly drives valuations for assets like Bitcoin and gold. At present, his team is cautious with early-stage deals, finding them too expensive compared to the attractive opportunities of the 2022 to 2023 bear market. Instead, they are focused on liquid strategies and selective positions. His highest conviction bet is Athena, a stablecoin project he advises and holds significantly, as he believes stablecoins will be central to U.S. efforts against de-dollarization and poised for massive growth alongside Circle and Tether. Hayes stresses that Bitcoin remains the anchor asset, but each investor should size exposure to their comfort level. If it keeps you awake at night, you're overexposed. Beyond Bitcoin, he sees the future of crypto tied to decentralized applications that generate real cash flow by displacing traditional businesses. Yet he cautions that most projects still lack clients' product-market fit or mechanisms to reward token holders. For Hayes, the winning approach is combining Bitcoin's proven resilience with carefully chosen plays in areas of genuine utility and economic activity. Let's get back to the interview.
Liquidity. So I study the fiat liquidity. What's the pace at which governments will print money? And then what is the expectation of the pace? And so obviously those two things play on the multiple that someone's going to pay for an asset like Bitcoin or gold, because they have an expectation of a particular rate of debasement of currency. How does my view differ or coincide with what the market views? So we're pretty much fully invested, especially on the liquid side of things. We are very price conscious. So price is what you pay, value is what you get. We have very strict limits on what we'll pay for a project. Right now, obviously we're in a bull market. Founders are feeling good. There's lots of money in VC, private, family offices chasing, the good projects. We are not very active investing in projects right now. We think they're too expensive, and we don't see risk reward that's commensurate with what we saw back in late 2022, early 2023, where, essentially we've made our portfolio in projects like Athena and EtherFi, which have done very, very well because it was during the depths of the bear market. And so we were able to get very, very good deals. So right now, we're long the market. We're long Bitcoin, long, some other large cap projects, but I'd say the team is not doing that many early stage deals. We're focusing more on, DAT advisory things, analyzing different liquid protocols. Okay, do we want to take a position for a few months on some large cap coin? We'll do analysis on that, but I would say, the amount of deals that we've done in sort of the pre-seed stage have, pretty much dwindled down to zero because it's just too expensive. Obviously, there's lots of, top 100 market cap coins that have real business models. Obviously, one that we're very bullish on, and we are an advisor. I have a large position. Athena, the stablecoin narrative, fastest growing US dollar stablecoin in the history of crypto. They're number 3. I think they have about 16 or 17 billion circulating supply of the USDE. I think that the governance token is going to do very well as they start to buy back their token. Now that they've been listed on Binance, they have a certain number circulation supply, and the yield is within their target range. So I think that's a great investment. We're long that. We believe in that. I believe in the sort of the stablecoin macro narrative that the United States government is going to try to, beat back this de-dollarization push by trying to force certain pockets of the world to accept dollar stablecoins instead of like bank deposits and other things, so that they can buy their treasuries. So I think that's a big meta narrative, and Circle, Athena, Tether, some other projects, they're going to do very, very well. And I think that what's the stablecoin market cap now, like 250 billion or whatever it is. I think there's massive growth in that, and this is probably one of the highest conviction bets that we have, and it's our largest position in our portfolio by far. My framework is, if you go to bed at night and you need to check your phone because you're worried about the price of Bitcoin, then you own too much. So whatever that amount is, I think it's a very personal decision. Some people would be okay with completely being Bitcoin. Some people would be okay with only 1% Bitcoin. That's a personal decision. But if it's keeping you up at night, then your exposure is too large. I think at the end of the day, everyone's investing because they believe there's going to be some real activity on a particular chain, and real activity is going to do some sort of cash flow generation outside of Bitcoin, which is like, I'm going to outperform, fiat. It's not, you're not investing in Bitcoin to make money from a cash flow perspective. But all these other decentralized applications, they're disintermediating some business that charges people money and gives some of that money back to their equity holders or bond holders or whatever, right? And so from a token standpoint in this decentralized application ecosystem, we all are eventually believing that there will be some cash flow generation. But, over successive cycles, we found that most projects have not done that. Number one, they probably don't have any clients. That's, vast majority. No clients, no product market fit, no cash flow. Then there is the ones that are successful, but then for whatever reason, don't give any of that value back to the token holders. And I think investors have gotten tired of these two scenarios. And after, ICOs really came into creation in 2015, 2014, whatever, around the time that Ethereum went live.
The trajectory of crypto and hard assets is inseparably tied to liquidity, the pace of monetary expansion, and the search for reliable value preservation. Bitcoin continues to stand out as the most resilient asset against fiat debasement, while gold and stablecoins present important complementary plays, especially in the context of geopolitical shifts and de-dollarization pressures. At the same time, the broader crypto market still struggles with fundamental shortcomings. Many projects lack product market fit, meaningful client bases, or mechanisms to pass value back to token holders. Looking ahead, the most successful strategy will likely combine the long-term security of Bitcoin with carefully chosen opportunities in assets that not only benefit from liquidity cycles but also demonstrate genuine utility, sustainable growth, and the ability to outlast speculative hype. Which combination of Bitcoin, gold, and stablecoins do you think offers the strongest balance between long-term security and short-term growth in today's market environment? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.